If you buy a 600k house with 5% down and at 5% interest, how much do you think you will pay interest over 25 years? Most people guess 150k or maybe 200k. But the real number is over 420k, and that's the money you will never see it again. And here is the part that almost nobody runs. If you pay an extra 500 a month, it can wipe out nearly 5 years of payment and can save you over $100,000. Let me show you how.
Let's understand with the real example. You see the house, one of the house at 823 Fairland Road in Kanata, which is listed at 602 $900, roughly 600k. So I will use a PMO extra mortgage payment calculator and we will plug in the numbers. So if you see, I have taken a rough amount of 600k. The down payment I'm adding is 5%, the way earlier we discussed. Term years is 25 years, and the interest rate, current interest rate, I typed it on Google and I found that these are the best interest rate, 5 years fixed interest rate. So I added 4.59 from the RBC bank, and I plugged that interest rate here. And if you see the total interest paid over 25 years, it's almost 400k. And I will show you how its interest is calculated. So the purchase price is 600k, and the down payment we are paying, which is 5%, which is 30k. So if you subtract 600 minus 30k, the remaining amount you will get is 570k, right? And the interest payment we have 4.59. So if you multiply 570 by 4.59 percentage, and if you divide that by 12, you will see 2180.25 amount that just going to interest. So let's see here on the table. So if you see first month, which is monthly payment of 3197, which includes principal and interest. So if you see 3197, and out of that the principal paid is only $1,000, and the amount we calculated 2180, it's the interest paid. So, and if I scroll down this table, you will see that for almost 8 to 9 years, the amount you are paying is just going towards the interest. And at 120th month, if you see here, the amount the amount you are paying will almost equal, like the principal and the interest paid will be equal. And after that, you will see that the amount you are paying is going more towards your principal amount. So roughly for almost 10 years, you are just paying your amount is just going towards the interest.
So in addition to that, you have property taxes. So in Ottawa, the yearly property taxes are around $4,000 to $6,000 a month, which is roughly $350 to $400 a month. And also you have home insurance. So for standard owner-occupied townhouse, you have home insurance around $80 to $100. And also you have CMHC insurance, because we are paying less than 20% in down. So there is interest calculated on top of that on that as well. So for 600k house, your monthly all-in payment comes to low to mid $4,000 a month.
Now let's understand what happens if we pay an extra $500 per month. So if you see on my screen, I'm using the same calculator. The amount for the house is also same, the one which we used previously, like 600k. So if you see here, everything is same. The down payment is also 5%, and the interest we are using is 4.59. So if you see, have kept extra payment type recurring, payment frequency monthly. Extra payment start year is first year. Extra payment start month is also first month. Extra payments end at the end of the loan term. There's also option that you can use before the end of the loan term, but for simplicity, I'm just writing at the end of the loan term, and I'm adding $500 an extra payment. So if you see here, says that making an extra payment will save you 96, closer to 100k in interest. And also, if you see the months until payoff with no extra payment, it's 300, which is 25. And with extra payments, if you divide 234 by 12, what you get is like 19.5, almost 5.5 years you are saving. And if you see here, when you see when I click here, like payment schedule with extra payments, you will see that our extra payments, they are getting equal at the 53rd month. And in the previous one, we saw that it was at 120th month. So That extra $500 does not get its own interest calculation. It drops your balance immediately, which means next month's interest is calculated on slightly smaller number. And if we do that every month, we are creating a snowball effect where each extra $500 makes the following month's interest a bit lower. So more of your regular payment goes to principal, which then lowers the interest again, and so on. As we saw that it cuts your payment time payoff time down to around 19 to 20 years instead of 25, and it's reduced your total interest by an order of 100 to 120k dollars over the life of your mortgage.
Yes, you are paying more out of your pocket, but that extra payment is saving you 5 to 6 years of your life with no mortgage payment in your 40s. And those are the years where those extra $3,000 you are going to pay to the bank, you can use it for your investing, daycare, renovations, or just have more breathing room. Now there are few execution details that you have to keep in mind. First, use your prepayment privileges. In Canada, most lenders or banks, they allow you to prepay your mortgages. Your $500 per month is counted towards prepayment, and as long as you are within the limits set by your lender, you are good. Second, make sure it's principal only or prepayment option. In your mobile app, when you are paying, make sure you are using your lump sum amount or principal or prepayment options. Because if you just pay $500 as a normal payment, your banks they will just increase the due date, and you will save and you will save no interest. And third, keep your future self in mind. In Canada, mortgages are renewed every 3 years or 5 years. If you pay your principal down aggressively right now, so in future if rates are increasing, you have to pay less amount and you will have more room to breathe. And if you can't do 500, just start with $100 per month. It will still save you 70k. So build habit now. So first time buyers, that $500 per month is ticket to your freedom faster. Run your own numbers. And also in 2026, 60% of mortgages are being renewed. And because of that, for many homeowners, their mortgages are being jumped by $1,000 or $1,500 per month. Click here to watch my video 2026 mortgage renewal, where I'm explaining how this renewal is affecting Canadians and how you can budget yourself. And if you enjoyed this video, please hit the like, share and subscribe button so that many people can find this video. I'm Umang Bhanushali. Thanks for watching. Until then, see you in the next video. Bye.